What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is November 18th of 2021. Well, folks, I hope you are having a fantastic day wherever you are. And in today's video, I not only want to spend some time to talk about whether or not the correction is finally over, if we're expecting for prices to go lower from where we are now, and outside of it as well, not only talk about our general expectations about how price will recover, but also dive into why right here, right now, I think we're setting up the foundation for the next rally over the coming months, going into Q1 and at latest Q2 to reach our new relative highs, not our all-time highs for the cycle. We'll talk about this as we go through the conversation. All right, so let's go ahead and dive straight into the conversation. I want to start by taking a look here at the weekly chart. We can obviously see why people are a little bit concerned at the moment. We've gone from around $69,000 within a little over a week down here towards around $59,000. And as of today, we are starting to retest back down to the low range from back on the 16th, about 2 days ago. So if we take a look at the hourly, take a look at the daily or weekly, we can see that this looks like it's setting up for lower price action. I'm just going to be completely candid with you guys. I'm not bearish on Bitcoin in the long run, but here in the short term, it looks like it needs to test a lower range. So what are we looking for? Well, again, as we talked about in the previous couple of videos, we're going to see Bitcoin testing around a lot of these previous resistance ranges in the past, as we've already seen here, coming down and testing this range here. But we also are probably going to test in some of these other mid-range support ranges from the resistance back here in the general first and second quarter of 2021 after we'd had the really significant rally. So a lot of these significant price levels in between where we've seen it either serve as resistance or support, where price is going to have to charter down in. Our ideal scenario is for us to not really go down below 55,000. We would like to see it hold above that range. But again, we might come over here and really start to turn some of these ranges into support. The worst case scenario, right? Worst case scenario being probably something around $50,000, as we had resistance back here, it's made support, resistance here before the sell-off. You can see as well support, support, resistance, resistance, right? So some of these key levels, the price is generally going to dodge between these different key levels over the next coming weeks. And I think that's going to set us up on the foundation here where we've officially made this range of previous resistance new support, right? So we might come down here. Worst case scenario, zigzag down here. But again, I'm going to be of the opinion here that we're going to probably hold out in this range, possibly start to base out higher and get back up to those high ranges back sometime in January, right? So again, I'm very optimistic on Bitcoin's price, even in the relative short term, but I do think we are going to have a continued pullback here, and we should set our expectations that this is likely going to play out. Now, this is not just in the case of Bitcoin. I'm not just being bearish on Bitcoin. I think the total market cap is going to decline down towards around 2.4 trillion. We're already a good amount of the way there, as we've dropped down from $3 trillion, a big even psychological level on market cap. So I think that we're going to come down to 2.4 trillion. This is previous support over here twice in the past, previous resistance, and previous resistance there, right? Pretty simple stuff. I don't want to overcomplicate it. I don't think we need to look for anything else. And 20% is a solid discount range where buyers will start to come in and potentially provide the support here at critical previous resistance, right? Now, outside of that as well, this is also generally very short-term bearish take on Ethereum, right? That we're going to continue to pull back in price, but really by how much? I think we're only going to $4,000. And the reason why is we can see very clearly here that this is the general range here on the weekly chart for resistance 2 times in the past. And I think what we need to do here before we really enter into major price discovery mode is we need to come down here and build a base foundation, just like Bitcoin. We need to be able to come on top of that May resistance and make it new support. There is no difference between these two, outside of the fact that ETH will probably outperform Bitcoin, I think, throughout the rest of the cycle by anywhere from a range of 50% towards 150%. So the ETH BTC ratio, which we've talked about, right? We think it's going to continue to coil in here in this slight band that we've been talking about for some time. And then we're going to be able to set up the foundation where we make the ETH BTC ratio's previous resistance, this green line here. It's kind of the midpoint of cycles. We're going to be able to make that support and really pop off here sometime later on next year, right? I don't know exactly when it's going to be. Could happen in the Q1 rally when we're expecting Bitcoin to go to 100K, or it could be in the final blow off top for the bull market sometime in the time around Q4 of 2022. All right, so I want to go ahead here again, talk about the idea here for the broader cycle, and I'm going to go ahead and use data science to kind of rationalize a little bit about why I think we are setting up the foundation. I'm with the bulls here in this case that the price is not in. This is not a double top by any means. We don't see double tops in crypto markets generally. So I want to go ahead and just preface that. I'm generally having a bullish sentiment here in the market. But let's go ahead and talk about why. All right, what are we thinking could happen here? Well, our idea is, again, that we're going to have another wave here in the market, another mid-cycle rally sometime in Q1, latest early Q2 of 2022, right? So this is, again, the idea where we would start to channel sideways, build up those higher lows, meet up to the previous all-time highs, and really start to break out higher. I'm going to actually go ahead and redraw that again. Sorry, I forgot I'm on logarithmic chart. So again, starting to build up here sometime into Q1 towards $100,000, right? Not even a crazy ask here, especially when we take a look at the logarithmic chart. This seems pretty in line with what we should expect. Then outside of that as well, we're probably going to have a correction of some sort. And this could be a pullback down towards 80,000, 75,000, right? But generally a mid-cycle correction, not as sharp as May, but again, something probably more heavy than people are used to in market cycles, or more than what people would expect. So maybe we might go down to 70K, 65K, whatever the general idea is. We would start to, again, reaccumulate here, building up our price action, right? Building up confidence, retesting those highs like we've done here. And then eventually we're going to set up the foundation for a major blow off top here in November towards 200K, right? So again, this is a general framework. Don't take it as gospel, but that's the general idea here. We think we're going to get another series correction. We've already had two on the way up since the bottom of the cycle. I think the third time is going to be the last one, and then we're going to really have our blow off top here. There's going to be some catalyst. We don't know what it is or what it's going to be, but again, this is a year out from now, right? So we're, again, keeping our estimations conservative. We're expecting that we are still going to reach those optimistic levels of 200K. I think it's completely reasonable for Bitcoin to reach a $4 trillion market cap, which is the valuation you get at 200K. With the existing supply and considering that we will have a little slight increase in new Bitcoin in the market. But generally, I think this is a very solid framework here to go off of. It sets conservative estimations. And what's nice is that it is going to give us another mid-cycle opportunity to potentially trade, because I think once we get towards the 100K price tag, whether you want to go to fiat or you want to cycle in to other plays, that might be an opportune moment to make some of those trades. But for now, we're not doing too much. We're averaging in on this discount more than anything. We're taking advantage of this consolidation period before the blow off later on this year. Now, I want to go ahead and talk a little bit about what substantiates this idea that we could really set the stage as we go down the line towards having a 200K top in the market. Well, I want to go ahead and talk about the metrics that I know everyone's talking about, or at least some people are watching or keeping an eye on. For those of you who are like me, who like data science, right? For example, we've got the balance on exchanges, the amount of Bitcoin and the exchange reserves. Now, I'm going to be the first to say here that, again, this number is not as good as it appears. Sometimes this metric does not count all the new exchanges that come out. Some of them don't report their holdings, right? Or they don't report all their exchange wallets, right? So again, it's important to understand here that with this, we're getting a pretty good picture of the idea of the general decline of Bitcoin on exchanges. And we can definitely see we're at a lower point here than we were back here in April. But again, I would say that give or take probably a 10% rounding error on the actual official metrics. But either way, we can see here very clearly that there has been a stark decline here on the Bitcoin available on exchanges. This makes the order book more thin, and it allows for price to move in a more volatile way. So when we're in bull markets where the trend is obviously to the buy side, aka the spot market trading, the market orders are pushing through the asks on the order book, pushing price higher rather than the bids. This is going to be a generally positive sign for Bitcoin. Okay, and we're seeing this with Ethereum. We're seeing it with the vast majority of cryptocurrencies that we have the data science to work with to see that a lot of the cryptocurrencies are moving off exchanges into new exchange traded note products, like the products made by Grayscale or by institutional investors moving to their own custodial solutions. All right, next up, I want to take a look at two different perspectives on the HODL waves. So the HODL waves showcase the age bands of the unspent transaction outputs for Bitcoin. And this basically means if we take a look at the measurement of all Bitcoin out there, when was the last time these Bitcoin were spent? And what's nice is that each Bitcoin will actually get paired into an age band. So we have, for example, right now, about a little under 12.5% of the entire Bitcoin supply that exists here today that has not moved in 10 years. We can effectively consider most of these lost Bitcoin, potentially Satoshi's Bitcoin, founder of Bitcoin, right? And then we can also see the 7 to 10 year band is also quite large as well, and feeding into that 10-year band as time progresses, right? But anyways, I digress on it. We can obviously see that there are a lot of Bitcoin getting into these longer multi-year time frames, a large chunk of supply, right? But what I really want to focus on here is the aggregate between anywhere from Bitcoin that are as old as 6 months all the way to 10 years. And what we can see here is that we're very, very close to breaking to new highs here on the aggregate for these different bands in cryptocurrencies. We're almost back up to where we were here on October 14th of 2015. This is absolutely incredible stuff in the sense of the supply shortage. Now, outside of that as well, we can also take a look at it in the alternative perspective, right? We can take a look here at crypto, Bitcoin that are less than 6 months down to being traded within or traded or moved within the last 24 hours. Again, we don't know in the sense that, there is a course with all these data science models. It's important to understand here that we're not going to have an absolute metric on when Bitcoin were last bought or sold, but this is letting us know when they were last moved. Right? So if we're generally seeing this trend go down over time, this likely means that there is less Bitcoin available on the exchanges, less Bitcoin being traded and actively moved, and therefore more people hodling their cryptocurrencies or holding their cryptocurrencies, right? So we can see, for example, back here in July or June of 2011, right, the percentage was sitting around 60% total. You can see here on the left-hand side of the screen. Go ahead and scroll down so you guys can see this a little bit better. We can see we're at around 60%. Down here towards 2013 and 2014, we remained a little bit below 50%. We came back to that range here back in January 2018 as we came to the cycle top. This is what we tend to find, that the shorter bands start to move up as people start to move Bitcoin or crypto back to exchanges to take profits. And we saw that a little bit here in May. But just to understand where we are right now, we're at really significant historical low range here. That last time we saw this here, this was for example, near the bottom of the bear market. We can see here as well, this was bottom of the accumulation channel, 2015. So we've got a really, really significant dry amount of supply here, and we're in the middle of a cycle here, right? So that's a really interesting differential between these last two retests here, where they were pretty much near the bottom or capitulation point of the bear market. And I think it shows again, and this is what people have been pointing to, that we've got a pretty dry amount of supply in the order book. But again, the important thing to understand here is that a lot of that is also crypto going to derivatives exchanges, being utilized on crypto lending platforms so they can borrow more stablecoin liquidity and buy more crypto. This market is heavily driven by leverage. So to play into this, again, in this topic we discussed, I think it's very clear here that we are setting up the foundation here, the right amount of leverage in the market, institutional adoption, all these new financial products coming out. That's going to push Bitcoin in Q1 above the previous highs, and we're going to rally up somewhere in late Q1, early mid Q2 towards 100K. And we're going to have a pullback there, another mid-cycle correction where the market deleverages a bit. We reaccumulate again. The momentum and excitement's still there. Again, there will be probably more catalysts. And then boom, we get a breakout here and we really start to climb up towards 200K. That's the general framework we have here. And then after that, we not only have this, but we've also got the altcoin cycle blow off top. We think is going to come sometime afterwards, soon after. So I'll go ahead and pull up the chart here so you guys can see. We'll go ahead and take it off the logarithmic so it's more clear, right? Altcoins are going to slowly continue to grow here, have some zigzags. As Bitcoin enters into price discovery, altcoins will move down. In the meantime, I think altcoin dominance is going to continue to grow and retest the highs back here in January. Then we'll pull back, come up a little bit higher, and then we're going to have what I call the golden rally, the blow off top like we saw back in December and January of 2017 going into 2018. Anyways, I've rambled on enough, guys. If you like this analysis, please consider dropping a like. And even if you don't like it, consider liking and leaving a comment as to where you agree or disagree. I want to hear from you guys. We got to get this conversation going. I'm all about making sure I give you guys the most rational take on the market, conservative time frame estimations. If it happens earlier, that's great. But to be completely fair, guys, I want to make sure to set those expectations at a neutral level. And again, I'm still hearing a lot of people calling for really ridiculous highs in November, as well as December. December. And to be completely frank with you guys, I just don't think we're going to be seeing 100K, this kind of cycle rally that we're talking about on Bitcoin anytime in this year. And that's okay. It doesn't mean that we're bearish on it. We're just setting longer time frame estimations. We're understanding that these market cycles are generally growing longer over time and they require more liquidity. So anyways, guys, I digress. Thank you all so much for watching. I hope you have a phenomenal day wherever you are, and I'll see you all in the next video. Take care, everyone.